Hello and welcome to the September 1st, 2023 episode of Watching the Tape. If you follow investment markets closely, then maybe you've heard the phrase, bad news is good news on a handful of occasions. In this week's video, we're going to take a look at a textbook example of a bad news is good news trading day that we just experienced on Tuesday. We'll lead off with the bad news. We had two fresh economic data points hit the tape on Tuesday morning just after the opening bell rang. First, the so-called JOLTS data showed that job openings fell more than expected and were down to the lowest level in more than 2 years. Second, a consumer confidence survey came in much lower than expected. So we had two important economic indicators showing that the economy may be contracting. Stock prices incorporate investors' expectations of future growth and the cash flows that come along with that growth. If the economy is indeed cooling off, then the prospects for future cash flows should dim, right? And the stock prices should come down to reflect that, one might think. That was not the case on Tuesday. The good news is that the S&P 500 was up 1.5% on the day, and the NASDAQ finished 1.8% higher. Those are big up moves. What gives? The two bad economic reports were new information. And since stock prices already bake in all known existing information, they are reasonably expected to only react to new information as it comes out. So again, what gives, you ask? Well, I'll tell you what gives. Broadly speaking, stock investors saw the negative economic data and interpreted it to mean that there is now a lower likelihood that the Fed will continue raising short-term interest rates. As you know, the Fed's been on an aggressive rate hiking campaign to tame economic growth in its fight against inflation. With new information out that the economy may be starting to show signs of contraction, the contraction that the Fed has been targeting, then maybe the Fed will take a break and leave rates at 5.5%. Better yet, in the eyes of some stock investors, the Fed may start to cut rates soon. Higher interest rates are viewed negatively by stock investors, so any hint of flat or lower rates in the foreseeable future is good for stocks. If you found yourself scratching your head even just a little bit during this video, I really can't blame you. I'm already a believer that predicting daily moves in the stock market is impossible. And it's only further substantiated when I run into trading days that can only be explained as bad news is good news, or the opposite, good news is bad news. Those days exist too. Buying and holding for the long term is boring, but it's really the only approach that makes sense. That way you can peacefully tune out the noise coming from unpredictable daily stock price movements. That's it for this week. If you found this content interesting or helpful and can think of anybody else who may benefit from it, please share it. Thanks for watching. We'll see you in 2 weeks.